Something major is happening in the global currency scene, and it's got every dinar and dong holder buzzing across Telegram chats, online forums, and social platforms. Discussions are heating up about what is really happening with exchange rates in 2025. Is the long-anticipated revaluation finally on the horizon? Or is this just another cycle of speculation? In today's video, we'll break down everything you need to know, the verified updates, the real reactions from the community, and what these developments could mean for your next move. Whether you've been in this space for years or are brand new to it, stick around. By the end, you'll have a much clearer view of what's real, what's rumor, and what's next for both the Iraqi Dinar and the Vietnamese Dong. So let's start with the big question everyone's asking. Have the rates truly changed in recent weeks? Several currency websites and online investor groups have been sharing figures claiming to show rate fluctuations. Some posts suggest the Iraqi dinar has quietly moved against the US dollar, while others highlight new shifts in Vietnam's economy that might impact the dong. But before excitement or panic sets in, it's important to remember that official exchange rates are determined by central banks, not by social media dealers or rumor sites. So far in 2025, the Central Bank of Iraq has kept a steady monetary course, emphasizing gradual economic reform rather than sudden policy changes. That doesn't mean nothing's happening behind the curtain. Iraq continues to make measurable progress, focusing on diversifying beyond oil, modernizing its banking infrastructure, and strengthening foreign partnerships, all key steps towards sustainable growth. Economic experts agree that meaningful changes in currency value don't occur overnight. They're the result of coordinated policies, trust building, and consistent stability, something Iraq is still rebuilding step by step. Meanwhile, in Vietnam, a similar pattern is emerging. The State Bank of Vietnam has maintained its stable approach in 2025, prioritizing balance and resilience. Vietnam's manufacturing and export industries continue to thrive, attracting global investors looking for reliable and cost-efficient markets. This steady growth supports the dong's credibility and strengthens Vietnam's trade relationships worldwide. Yet, officials remain cautious, focusing on long-term economic health rather than surprise reevaluations that could create volatility. The goal is sustainability, not shock. Now let's talk about what actual currency holders are saying. That's where the conversation really gets interesting. Across online communities and Telegram groups, opinions are split. Long-term dinar and dong investors express cautious optimism, pointing to reforms and economic progress as early indicators of future strength. Others, however, share growing frustration. Many have waited years, even decades, for that one major breakthrough, and each new rumor can feel like déjà vu. The emotional highs and lows have become part of this investment journey. Excitement over rumored rate shifts followed by disappointment when nothing official happens. One key discussion in Iraq right now centers around the gap between local street exchange rates and official central bank rates. Many holders have noticed that local trades often differ from official numbers posted online or internationally. This difference has sparked debate over which rate truly represents the dinar's real value. Some argue that the street rate reflects true demand, while others insist that only the official rate carries legitimacy. Regardless of which view you take, it's clear that this topic continues to fuel endless speculation and engagement among holders. Over in Vietnam, investor discussions revolve around trade alliances and economic partnerships. Many are closely following Vietnam's deepening ties with major players like the US, China, and the European Union. These global connections, they believe, could gradually lift the dong's reputation and strength. Vietnam's growing role in global manufacturing, from electronics to textiles, gives it a solid economic foundation. Still, analysts caution that strong trade performance alone doesn't determine currency value. Inflation, foreign reserves, and domestic policy are equally critical. Let's also acknowledge the emotional side of this community. For many dinar and dong holders, this isn't just an investment. It's a test of patience and hope. Some see it as a potential long-term windfall. Others treat it as a learning experience or a modest hedge. What remains constant is the passion and persistence of the community. People continue to share charts, data, and articles, proving just how emotionally and financially invested they remain. But it's vital to remember central banks don't base their decisions on social buzz. Currency policy is driven by measurable factors: inflation, reserves, trade performance, and political stability. In 2025, both Iraq and Vietnam are focused on those fundamentals. Iraq continues to rebuild institutional trust and enhance banking transparency, while Vietnam manages inflation and industrial expansion with precision. These are serious, long-term efforts, not quick fixes. It's also crucial to understand the distinction between normal rate fluctuations and a true revaluation. Daily market movements happen everywhere and are natural. A revaluation, however, is an official government-led adjustment of a currency's base value, something that only occurs after major structural reform. For Iraq and Vietnam, that kind of change would be part of a broad economic shift, not a response to online speculation. Interestingly, 2025 has revealed a divide within the investor base. Veteran holders, those who weathered years of rumors and false alarms, remain grounded yet optimistic, trusting that long-term reforms will eventually pay off. Meanwhile, newer investors tend to be curious but cautious. They're learning how this market operates, asking practical questions about authenticity checks, secure storage, and exchange readiness. This growing focus on education over hype is a positive evolution. It shows the community is maturing, turning excitement into informed preparation. Many are taking smart steps, using bank deposit boxes, investing in fireproof safes, or diversifying storage for extra protection. Verification is another major focus in 2025. Serious investors now use UV detection tools, official reference guides, and educational resources to confirm the authenticity of notes. Proper documentation has also become a best practice. Keeping receipts, transaction records, and digital backups ensures smoother exchanges in the future and supports compliance with any potential tax or reporting rules. These small but important actions reflect how investors are becoming more professional and better informed, even while waiting for possible rate movements. But as always, where there's interest, there's misinformation. False intel claims and supposed inside sources are still spreading across forums. It's essential to remember that only official central banks decide exchange rates, not private dealers or online influencers. Dealers simply sell currency at market rates with a markup. They have no special access to government policy. Recognizing this helps investors avoid scams and false hope. Another common misconception is that global organizations like the IMF or World Bank control national currency decisions. In reality, these institutions only provide guidance and technical support. Each nation maintains full sovereignty over its monetary policy. Iraq's and Vietnam's independence in this process is a strength, ensuring that any future changes are grounded in real economics, not investor speculation. Financial analysts reviewing both currencies in 2025 continue to highlight long-term promise paired with a strong reminder of patience. Iraq's banking and infrastructure reforms could strengthen the dinar over time, while Vietnam's industrial momentum adds to the dong's credibility. Yet professionals caution that potential doesn't equal immediate. Even top economists can't predict exact timing or scale. That's why most financial advisors frame these currencies as speculative, long-term positions, rather than short-term moneymakers. For investors truly committed to understanding this space, education remains the key. Learning how foreign exchange works, what drives inflation, and why central banks adjust rates gives real clarity. Informed investors know that knowledge beats hype every time. Reliable financial sources, government reports, and educational materials are far more valuable than chat room predictions. The smartest holders are now investing and learning, not just waiting. On a broader scale, global currency dynamics are shifting fast in 2025. Major currencies like the US dollar, euro, and yen still shape market behavior, while inflation trends, supply chain realignments, and digital payment innovations redefine how economies function. Iraq and Vietnam are positioning themselves within this changing landscape, Iraq through transparency and modernization, Vietnam through expanded trade and exports. These strategies will shape their currency's futures far more than any short-term rumor. So what does all this mean for dinar and dong holders in 2025? It comes down to three words: patience, preparation, and perspective. The progress being made in both countries is genuine and measurable, but sustainable value change requires time, trust, and policy consistency. The best thing investors can do right now is stay alert, stay informed, and stay realistic. Avoid rumor traps and focus on verified information. Whether you're holding for hope, studying for growth, or simply exploring possibilities, remember, informed investors always outperform emotional ones. Thanks for watching today's breakdown. If this video helped you understand what's really happening, hit that like button. And subscribe for future updates on all things dinar and dong throughout 2025. This story is far from over, in fact. It's just getting started.